So today we're talking to Niel Blankstone of Blankstone Sington, which is an independently owned investment manager and stockbroker based in Liverpool. Let's get your views on different things then. I'm sure they will be you'll be very forthcoming with your answers as always. So could you start off by just giving us an introduction to the business, basically? What is it that you do? How do you do it? And where do you see the key strengths of the business?
Yeah, basically, Blankstone Sington is an investment manager and stockbroker, as you said. Our heritage is in stockbroking originally. It was set up by my father in 1976, and we evolved into an investment management company as the world changed. Very much we are predicated on retail investors and direct to private clients originally. And then increasingly, we've opened out all our services, both investment management and stockbroking. And as well, we have a somewhat unique proposition in the sense that we're masters of our own destiny, having a dealing, settlement and custody, so that we can actually power other people's propositions. Therefore, we believe we're attractive to IFAs and other professionals in particular in a number of ways, however they wish to use us.
That's great, Neil. It's obviously a very competitive market out there, isn't it? So why do you think clients come to you? What is it they're looking for from you?
I think there's a number of reasons. We have been around a long time. We are very much bespoke private client focused. The client and the servicing levels are extremely important to us. I know a lot of firms say that, but you're not just a number. In terms of the number of clients we have currently, there's plenty of scope. The recommendations have always come from clients or other professionals. And generally, I think a lot of people still like to use a company of our size as against some of the extremely large players that are out there. It's a horses for courses exercise. We think we can offer something slightly different, a bit more traditional in some ways, but in a very modern twist. It's interesting to see that as a result of the pandemic and lockdown, actually client inquiries have probably gone up significantly as people really want to talk to people rather than necessarily doing things robotically or automated. So they're finding what we're offering of great interest.
I'm sure. Yes, that makes good sense, and we've heard that from lots of other managers too, actually, which is a great sign for the business, for the industry, isn't it?
It is. The industry, there's room for everyone, and there isn't a one size fits all. I think we all have a place, and realistically, it's about tailoring it to the specific needs. We're nothing without our clients and our connections. It's a people's business. Through a pandemic and a lockdown, that's harder, but actually the adaptability that we've shown certainly is something that's appealing.
Indeed. So Neil, thinking about intermediaries in particular, how can they benefit from your services? Are there particular areas that you find that are attractive to IFAs where you're getting interest from them?
Yeah, I think the central message that we've always tried to get out to intermediaries and IFAs is to see us as an extension of their own business, realistically. In lots of ways, we're there to be used and abused, if I can put it so crudely. But realistically, we can offer them either, if they haven't got the investment management capability, we've obviously got that as well. If they want hand-holding on the advisory side or an investment committee, we can do that option, or we can simply execute. So realistically, it's however anyone wants to use us is what is the message that we've always tried to deliver. We have a couple of taglines or sayings that we think are really appropriate. Blankstone Sington stands for making investment simple, which is our ultimate aim. We want to open it out to as wide an audience as is possible. And the other one that we derive from being in Liverpool. Liverpool is renowned for all sorts of things, but certainly as a people, we have a can-do attitude. So we like to do things and to get on with it. But more importantly, we also think that, and we're honest enough to say that if we can't do it, then we'll know someone who can. So we're quite happy to do other referrals as well. And it's simply about helping the wheels go round. So yeah, the services themselves are there to be used in any way, shape, or form by an IFA that they think we can help.
And does that extend to bespoke portfolios as well as model portfolios, or is there one particular direction?
The portfolios, the services, the direct services that we offer as investment management is split three ways. We offer a bespoke portfolio service. We do offer a managed portfolio service or model portfolio service. In some ways, I prefer to call it a bespoke light service because it's templated, yes, and it doesn't have CGT constraints. It's designed for the smaller client. But probably the most important element of it is actually the asset allocation underneath and then the population. So we have an in-house research team that people can tap into if they want to use that. Those are the two main discretionary investment management elements. We have a specialism because of the stockbroking heritage through the inheritance tax portfolio side, which is award-winning. It's actually my background and my baby. I'm lead manager on that. That invests purely in AIM stocks, which isn't for everyone, but it's been independently reviewed by MJ Hudson Allenbridge, and they, bless them, said themselves that it's a portfolio worthy of consideration in its own right, to quote them absolutely. So although it is designed to benefit from business relief for inheritance tax purposes, and it invests in AIM, which is obviously seen as the highest risk end of the equity market, it is a proposition that can be used, say people wanted smaller company UK exposure, and has an extremely good track record. So that's on the investment management side. On the stockbroking side, what we do is give them access to, obviously, markets and funds, investment trusts, unit trusts, either on an advisory or execution only basis, so that all of that can then be used because we can power other people's propositions. If they want to, they can tap into it and use it for their own purposes, how they would like to.
Oh, that I'm sure there's a huge range there, basically, isn't there? But that's interesting about the IHT service there with AIM stocks. I'm sure. Yeah,
I mean it's obviously both the MPS and IHT portfolios are probably hot topics at the moment. MPS is consistently in the news. Causes me a bit of frustration, I must admit, because there's badged model portfolio services, there's real model portfolio services, there's badged managed portfolio services, and there's real managed portfolio services. The revenue hasn't helped in some ways because of the what I call cigarette paper thin difference that there is between the two, and yet one suffers VAT on service charges and the other doesn't. So as is often the case in the industry, we could do with a bit more clarification and simplification in that regard. We've seen a lot of the larger investment houses are now able to offer model portfolio services without VAT being charged, and that's in its most simple. That's because they're literally able to put a portfolio of investments up on a platform that IFAs can then tap into, which is fine in one sense, but takes a little bit of the service away as far as I'm concerned. There needs to be greater accountability, I think, in relation to the portfolios. There needs to be a greater level of understanding as far as I'm concerned, and therefore education to the IFA market in terms of how these portfolios are put together, what the underlying investments are. A greater understanding could be made for the IFAs who I know, a lot of them, for example, are very reticent to get involved in the investment trust market for all sorts of different reasons. I think that narrows down the investment field for them and therefore their clients, which I think is really unfortunate. Investment trusts have been around far longer than our open-ended cousins, and there's a reason for it. So if I was sitting there looking at an investment proposition, I'd like to try and understand, why and what the difference is and how it could benefit me. We've seen huge headlines more recently with regard to some really successful investment trust propositions. The obvious one is Scottish Mortgage, who of course took their huge stake in Tesla, which worked out fantastically well for them for a fairly short, fairly recent period of time. Baillie Gifford is an investment house we like. It is a bit different, so they're to be congratulated for what they did. Of course, what inevitably happens is these things come into the news, then the herd follows, and it's almost too late. What we'd like to do is obviously encourage people to come and talk about it early. The same is therefore the situation with something, with the IHT proposition. It's amazing how many people wait to the back end of their lives to look at things like IHT. Actually, our service is really good and will benefit clients if they invested a lot earlier, because another of the things we're very, very conscious of is that it's more about time in the market than trying to time the market. So the sooner that you can get invested in a proposition that gives you flexibility and allows you complete access, I can't see why people will look at that earlier, apart from the fact that the regulation in particular scares people as to whether it's suitable or not. Because an AIM proposition in particular is deemed to be high risk because AIM is high risk, but it is listed, it is equity, it is highly transparent. You can see a two-way price, and therefore it should be encouraged that people should look at these things if there's an opportunity, rather than discouraged from the point of view of high risk. And the reason that it is a problem is because people are looking at it too late. If you started to invest in an AIM portfolio, I would suggest early on in your planning cycle, then you would reap the rewards ultimately. And if you don't reap those rewards, certainly your beneficiaries will.
And Niel, I was interested to see recently that Blankstone Sington has joined the IPSX, the International Property Securities Exchange. And it would be great really to get your thoughts on that, and maybe you could give us some background first of all on it for those who are not familiar with it. So what is it, who's it for, why does it exist, those sorts of things, and also maybe what benefits does it bring?
Yeah, I mean, IPSX, just to explain, as you've said, it is badged as the International Property Securities Exchange. It is the first of its kind. It is a fully regulated, recognized investment exchange. So it's a stock exchange for property only. And what it will allow both developers and investors to do is, on the developer side, it is to raise finance through the issue of equity or loans. And on the investor side, it allows them to invest directly into either individual buildings or individual projects. So we've got involved, obviously, as members of a stock exchange and used to dealing in stocks and shares and bonds, and are highly encouraged by the initial company that's going to be brought to market. What it is allowing people to do is also look at things very much locally. The first issue is something called the Mailbox, which is a property in Birmingham, which a lot of people will know in and around the Birmingham area. And as a result of that direct knowledge, they know who's in the building, they know how full it is, they'll have an idea of sort of the rentals the property earns and generates. and therefore they can make their own judgment call, and actually they can own a piece of it, which I think is a really good thing to think about and consider. Because if you walk past a building and you know it really well, how nice would it be to say, as you walk past it, I own a piece of that? So we think it's a really interesting proposition from that point of view. We also obviously are conscious that people are on the lookout for returns and security of income. And property, as we know, is an area that people like for its generally its dependency on and the income returns that it can offer. We have always had major concerns with regard to property investment being in an open-ended form, and a lot of the issues have been highlighted with that in some pretty high-profile open-ended property companies, whereby investors can't actually access their funds or anything else. If it's listed on a stock exchange, then there is an obligation to always have a two-way price. You might not always like that price, but at least you can get a price, and you should be able to buy or sell the investment in the first place. So we've always favoured listed property investments on behalf of clients, and this is just another but new way of doing it. So we're participating in a roundtable coming up on the 28th of April, which is going to look at it from a Liverpool point of view, but also very much from a wider investment point of view. Participating is myself from the investor side of things, but more importantly, I think, is Hardman, the independent research company, are going to be participating it. Professor Michael Parkinson, CBE, who is renowned in Liverpool and wider for urban regeneration, is going to be participating and explaining his side of it from Liverpool's point of view and how it could benefit. We've actually brought the politicians in as well, so that we have Liverpool BID, which is the business district companies supported by the local council, who are going to be there to hopefully explain Liverpool's strategy with regard to the city centre and the Liverpool city region, and how it will look to develop out the property side of things, and all the various sectors that obviously have to utilise property in one form or another. So we think it'll be a really lively event to come and hear more about it. And we just think it's a really good, different opportunity, which coming out of COVID, we've all got to think a little bit differently, maybe a little bit outside the box, get away from some of the comfort zones, and be prepared to listen to things that are new.
Yeah, it's a very interesting proposition, isn't it? I must say, very interesting. So finally then, to round things off for today then, Neil, let's look ahead, shall we? And get your thoughts on what does the future hold for the business, for Blankstone Sington?
Future for Blankstone Sington, we think that there is a huge opportunity for us, particularly in relation to the signals that have been given from, say, the Chancellor and the government in support of private investor entrepreneurship and private investor wealth. We can foresee that there is a need for brokers with experience, those who are used to markets, and the development out of private exchanges, the development out of private investment, areas of the market that the retail client probably hasn't been able to tap into before. So we're extremely encouraged by that. IPSX is one thing, for example, as an opportunity. We also, and very topically at the moment, we offer facility to be able to buy, for example, into football club shares. Often a number of these are private companies. We do a match bargain facility, for example, for Everton Football Club. Asset Match do a facility for shares in Tottenham. Of course, the latter is very much in the news at the minute, alongside my favourite team, which is Liverpool Football Club, with regard to the European Super League, which in itself quite rightly, I think the sporting side of it and the community side of it had been forgotten by the owners. In one sense, I don't think there's an issue with them having done it, in the sense that they set it out there as an agenda, as something they were looking to develop out. Clearly, they were looking at it from a business point of view. But to be fair, football in this country is way more than business. It is big business. Don't get me wrong, it's huge business. But it is a sport, and then it also transcends all the way down to community. And in that sense, I'm very disappointed as a Liverpool Football Club fan that FSG, the owners, did what they did. But I can also be proud of the fact that the owner can stand up there yesterday and make an apology. He got it wrong. And there's no question he got it wrong. On the other side of it, I'm a bit disappointed by some of the reactions that have come from other clubs. Everton, as I say, is one who we make a match bargain facility for. I question how much they actually are in support of the supporters and the community. Because in their case, what we do know is there's been a debt for equity swap, so that Mr. Mashiri and the Blue Heaven Group have taken a majority stake, but we're struggling to engage with them to allow us to more easily deal in the shares and create a system which allows fans, supporters, family groups, whatever it is, who want to have a stake in their club to access that in a easy format. So we're trying to drive things on that at the moment. We're working with someone who is looking to set up a private exchange, fully regulated for private companies, which would be perfect for this sort of thing. So we're hoping that we'll see some clear developments along new lines, but using all the things that we all love to do and enjoy. And if we can, then we're looking to possibly even help sport, football club, hospitality, leisure sector in particular, tap into what is an army, is the best way I can describe it, of private individuals, private investors who are there to deploy funds. They've got money, there's no question about it. The Chancellor has signalled to businesses, go spend, having signalled to the consumer last year to spend. He's given very, very generous tax breaks to companies to go and do it. He signalled he's going to take it back in 3 years' time with tax rises. So what we want is now to, how can I put it, mobilise the troops. But we need the tools to be able to do that. So these new exchanges in particular are a really interesting area of development as far as we're concerned.
That's interesting. Well, I wish you very well with all of those, Neil. And,
thank you very much.
And thank you very much indeed for joining us today. And I'm sure our listeners will have found that really interesting, because it's a great summary of what's going on in the industry, as well as some more nuanced little bits that you threw in just for good measure. So thank you.
Well, I really appreciate it, and thanks, and to everyone. Hopefully a few people do watch and listen. We'd just like to say from Liverpool, Liverpool's doors are open. We'll welcome you with open arms when you come. But more importantly, keep well and safe, everyone, and keep up the good work.